Hey everybody. All right. This is SM Trader. Today is 9/6/2025. We're going to talk about what happened on Friday with non-farm payrolls and the job report. As you all know, the market was expected to rally. And I want you to say to yourself, what happened? What happened? Because every website that I went to, every news channel that I went to, all the professionals out there, the gurus in the trading world, every report everywhere said that this market was expected to go up. And you know what? I said, no, it's not. Now, how did I know that? One, my mentor trained me not to rely on the news. Don't rely on the news. The second thing was that I said to myself, and this is what my mentor would say also, the market has been rallying for days, right? The broad market has been rallying for days. Here you have non-farm payroll. Everyone is expecting this thing to go up. If I was a big institutional hedge fund, bank, whatever, I'm going to say, man, I can trap a lot of people and really make a lot of money because they're all expecting this to go up. Let me tell you, I live in Central Time. Non-farm payroll was going to be announced commence at 8:30 in the morning, and maybe at 7 o'clock, from 7 o'clock to 8:30, it just started rallying. You could just see the activity, and I'm sitting here and I'm going, why are people buying? Who in their right mind would be buying now? They should have already been in this participating a long time ago and riding the wave up. You're buying right before non-farm payrolls. I just didn't get it. And so I said, wow, I'm going to short. This is a great opportunity to short and take money. I mean, the job report is it, I mean, do you really think, the job market is a lot better, it's just exploding and it's great. So anyway, so I didn't take any positions right until you see confirmation. But I have a contrarian view. I'm like, man, if this thing rolls over, it's going to roll over hard. It's not going to be a little thing. It's going to roll over hard. And of course, the report came out, and it wasn't, what people expected. It wasn't extremely good, but it wasn't extremely bad. So there was a little brief moment where it just kind of stabilized and maybe rose a little bit, and then it dumped because everybody, once it settled in, and they're like, oh, well, nothing's really going to happen. This report isn't all that great. It just tanked. So how can we learn from this, right? So let's take a look at the chart. And I'm going to tell you first, okay, so what I have up here, okay, this is a volatility grid that I created a while back. And this volatility grid is really, really helpful. So this is the NQ, and you can see, so every session, there's a low volatility, low compression state in the market. You see it here, you see it here, you see it here. Okay, it occurs every single session. Okay, and when I say session, I'm talking about, so there's a period of time where what is considered, I would say, the trading period for the broad market. Most people are looking at 8:30. It's not 8:30. When the market opens, right? Well, okay, let me rephrase that. So Central Time, the market opens here at 8:30 officially for equities, right? And now I'm a futures trader. So futures, you have extended hours, right? You can trade around the clock. So the time period of the current session open is different. It's not the 8:30 open for the regular stock market. So, and so we see that. And so when we see that low volatility, it's always a low volatility state. Okay. And you can see the time. The time here is 2,300. Okay. 2,300. Price is always going to react from that period of time. So, so we could see here, Okay, we could see here that I had a signal, a B40 signal to take this down right here at 8:30 in the morning, right when the report came out to take it down, right? And this particular indicator, this is the TDA2 indicator that I created. Is extremely accurate, and it's quite complicated to explain. It's the evolution of the RSI. I've taken the RSI, stripped away the static scale that it's on, and it's now based off of a floating scale. And to give you a little bit more understanding of it, you know how the 50% level is now used as anything above bullish, anything below bearish. I stripped that away too. Completely took away the 70, took away the 30, the overbought, oversold, took away that 50. It's outdated. And I put everything on a floating scale relative to volatility and relative to price, to momentum. And so you could see here, when price fell below this particular level right here, that's when we got the signal. We stayed down, and we're out right here, right when it broke back above, which that gives you the full extension of this move right here. And now we're just in chop going sideways. But and you can see, chop going sideways, and then we have the signal to take this up. Boom, beautiful up move there. Extremely accurate. B40 down, okay, and then a bull cross, boom, right back up. So let's see. Let's do now. What I want to I also want to show you guys. You see how price had been just grinding up here since that is 9.2. Okay, so if we go to the daily chart. Okay, we go to the daily chart, and you know how everyone says, "Oh, you trade in the direction of the daily." Well, I'm going to tell you that's absolutely crap. That is complete crap. So here's the daily candle right here. Now we can see that we had a bullish signal here. So price had been trading up, retrace, trading up, retrace, trading up, retrace, trading up. Here's the day that the market crashed. What happened to, what is that? Right? You know, this is the thing that gets me. All these textbooks, these courses, these price action traders, everybody out there trade in the direction of the daily. Well, how did that work out for you on Friday? It didn't. So that the daily does not drive the intraday direction. It does not. And why is this continue? Why has this continued to be perpetuated in books and in courses? I don't know. But what I'm telling you right now is you need to throw that out the window. The daily has nothing to do with it. If you don't believe me, there are videos out here on YouTube. There's one trader that lost over $100,000. And as he's losing, he says, well, you know, it should turn around because the daily is bullish. And he's trading like on a 5-minute chart or a 1-minute chart or something like that. And he's down 100K. And I'm like, dude, the daily does not drive intraday. And that's because that's what he learned. That's what we all learn. That's what's out there. So here's that daily candle right there. And price just, man, it just dumped in there. So from a daily perspective, let's look at this volatility model. Okay. So we were in the upper, so the volatility model extends from here until here, up until this level. And we were in the upper extensive level of this. And you can see this level, the base level serves as support. Boom, serves as support, serves as support, serves as support, serves as support. Every time price came back and hit it, it just rallied right back up, right? And that's what's beautiful about this. You don't need to draw any trend lines. You don't need to do anything at all. It just It tells you which direction you need to be trading in. So, but in addition to the base levels, we can also see that right here at this level right here, we have a hold level. So this is also going to serve to hold price up. Okay, price comes down, it deep dive to the lower volatility base level and reverses. Came back again, did the same thing. So that's your move there. Came back here, hold level is going to hold price up and deep dove here to the base level. Once you break over this, you're going to take this trade up. Okay, so that's from a daily perspective, right? All right, so, but if you're going to trade daily, you got to catch the beginning of the move. Never enter in the middle of the move. So if you miss this right here, once you saw price come down here, okay, come down here, and if you see, I have my bullish cross signal, okay, at basically the same time, the bullish cross, bang, right there. You're in the trade. You get another confirmation right here. This is my confirmation to possibly add on. Okay, I'm already in this. I'm already in the trade. Hopefully from here, definitely from here, I'm in the trade. So if this pulls back, which was Friday, that's okay. I'm still going to be in profit. Okay, but so that's how you want to trade the daily. But and you can see that dump. Everyone's talking about the dump, right? But on the daily, from a daily perspective, you're really just moving sideways. See this range right here? You're moving sideways. And that dump really doesn't look like anything from a daily perspective. But if we go to the 30-minute chart, okay, so non-farm payrolls right here at 8:30, and then you see this thing just tanked, right? Okay, just simply tanked. All right, and you can see here when it tanked, I got my signal. We also had a B40, okay, B40, and we just take this thing down. My indicators are absolutely, 100% precise. Yeah, that's beautiful, beautiful. Okay, and let's take so when this dumped, let's go down to, let's look for our inverse level. Where do you think the inverse level gave you an indication when this stock was going to tank? That answer is yes. Let's bring this over here. Okay, now this is the NQ, same thing, but we're using the tick chart. This is the 50,000 tick chart right here. And this was the rally prior to it. And we could see we're hitting the mid ATR level. So once I hit this level, this is also telling me, hey, you better anticipate a reversal right here, okay? And then again, on the world's most accurate indicator, okay, we are extended. So I am looking for, and we have been extended for quite a while here. So I am looking for the first indication that oh, let me bring this up. Hold on, let me bring this up so you can see it. There we go. All right, so here's the world's greatest indicator. Looking for that first indication of red right there, break below the threshold level, and bang, you know that this thing is going to go down right here, and you could have rolled this entire move down. Let's take a look. Oh yeah, let's come over here. This is the regular 30-minute chart. So this is the tick chart. This is the regular 30-minute chart. And this is the 15-minute chart. Now, same thing again. The world's greatest indicator, right there. Boom, take this sucker down. And look at the lineup. Here on the 15-minute, right there. Here on the 30-minute, right there. Okay? Just absolutely beautiful lineup. If you and to be confident, right there, look over at the 50,000 tick chart. It's right there. Right here. Okay, look at all three lined up. Once you have that, and you fire to the downside on the big squeeze right here, it's a no-brainer. Okay, and man, that and again, that lines up perfectly with the TDA. And wow, that's just absolutely amazing. All right, so that was the move there. Now on the 30-minute, let's take this to the 30-minute chart. All right, there's our 30-minute chart. And there's that dump. That dump was extreme. Mid ATR level right there. That was that push up right there that I couldn't believe people was buying. And where did this, and you know, using the ATR levels, where did price stop? Okay. It's quarter ATR, right? Those of you that said quarter ATR, you're absolutely right. There's half, there's quarter. Quarter is what held it. This is what you needed to be looking at right there, that quarter level. Let's go ahead and remove that. Quarter level held it perfectly. That was your signal, trigger signal right there. Bang. Here, bang, perfect right there. Bang, perfect right there. Everything is perfect. All right. And so this thing dumps and dumps all the way back to current session open, prior session close, and that further pushes it on down to mid ATR. So you went from mid ATR to mid ATR. Perfect move. And then from here, you're going to take your position back up. But you know, you could wait out of this because your big squeeze hasn't formed yet. So this is going to form the big squeeze from here, either to the upside continuation or to the downside. This, you can stay out of this volatility, or you can go ahead, since you know you're at this level and this level is rejecting here. You can see it. You can see it here from the big wick. Okay, from the wick, take this on up. But yeah, let's see. Let's just drop down and see how this looked on the 15. Same thing here. Beautiful takedown right there. Okay, let's drop it to the 5. What's great about my indicators, you can use it on any chart. It's going to be accurate on any chart, 100%. Look at this. They're buying here, hit the quarter level to the penny, come down. They're faking you out. They're trapping traders. See, when you see this stuff right here, they are trapping traders. Look, okay, down, up, down. They're trapping traders. This is the indication that, hey, this thing is not going to continue up after the report. The report has already occurred. Okay, so it's in boom, perfect signal right there. Take this thing down, let it dump right here. And so now this is what I mean on the higher time frame. So you got all this chop right here. So you could just sit it out, because you don't sit out on this because you don't have the big squeeze right here on the higher time frame. This is all just chop. But if you wanted to enter at the rejection of this candle right here, and you could see the sideways action right here. So price just went sideways on the 1 minute chart, and then boom, that took it right back on up. Yeah, price just went sideways right there, and we're at the lower level of the volatility model right there as well. So, but so now one thing that I want to show you. Okay, let's go back to the 5 minute chart. Let me see. Actually, that's not the one that I want. I want to use this one here. Okay, let's bring this over and let's change this to this chart here. Wow, look at this master control. This was just awesome. So bullish all the way, sellers took control, and then this thing just tanked. Gorgeous. All right, so what I want to do is show the inverse level. Let's go to 5 minutes. All right, so inverse is here. This is where the dump occurred, and that inverse. So it's advancing. So, but it probably came to right back here. Let's see if I can get it to it, so that we can see an extension to see when price actually dumped at that inverse level. Yeah, I may not be able to see it. Yeah, because so this particular indicator, it updates, and when it updates, it cuts off its tail, simply because I don't want to have a lot of information on the chart. Let me see. Let me just do the 15-minute. Okay, so there's a 15-minute. So we can see inverse level, right? As I've always told you guys, you hit it, you're going to have a deep acceleration either to the upside or to the downside. So there was a 15-minute. So on the lower time frame, let's go to the 10-minute. We'll just work our way down. Go to the 10-minute. Okay, inverse level here. So we go to the 5-minute, it's going to be there. 4-minute, 3-minute is going to be here. And that's where that thing dumped right there. But it's already cut off its tail. So yeah, we go to the 5-minute, and yeah, it's right here. So it's yeah. So 3 minutes probably going to be right. That probably reacted to the 3-minute here. Probably here. It swung up here, reacted there, and then this is right where it dumped, right there at that inverse level. So yeah, so that's what happened there. Man, that is absolutely crazy. So yeah, so I don't know why people were looking to take this up. Didn't make any sense to me. But yeah, that's the trade. All right, that's it for me. I am out, and take care. All right, out.